Welcome back. 2022 was a year that was marred by market volatilities, inflationary pressures, the Russia-Ukraine war and supply-demand gaps. But despite this, India's private equity and venture capital investments crossed the $60 billion mark for the third straight year. As per a report by Bain and Company, India managed to remain resilient and continue to attract investments. However, when compared to the 2021 peak of almost $70 billion, the investments value in India dipped by 12% in 2022, reflecting the global trend of a decline in venture capital investments. The report also finds that India's share of PEVC investments in Asia-Pacific strengthened last year to almost 20% amid a significant deacceleration in capital flows in the region. To discuss the key findings of the report and the implications, we're now joined by Ronika Sapra, Associate Partner at Bain and Company. Ronika, give us a sense of how PE investments will pan out in the year FY24. In the coming fiscal, how will things be? We have seen so many headwinds last year, but what are the cues that you would like to give us from FY23?
Hi, Parikshit. Thanks for having me on. To your question on, sort of FY24, I would say, the market is still evolving, right, when we look at the coming year. And when we think about, sort of the longer term view that we're seeing, from an India perspective, that continues to be robust, right? If you look at LP sentiment, if you look at how, sort of GPs are also thinking about their India allocations in the broader APAC region, very similar to what we've seen over the last year, that continues to be fairly positive. India continues to be a bright spot, in the APAC region. So over the long term, I would say, we do expect that deal activity and that flow essentially to continue over the long term. The other trend that you're, expected to see, especially in the immediate term, is that, there will be, higher focus on the diligence process, on ensuring, that the bar for investments remains high. So that's something we should, see in the coming year as well.
Right. Now, looking at how the investment space panned out, you have said that you saw a decline in investments when it came to the information technology space. Do you see investors getting more critical of startups, of companies when it comes to investing in the IT space compared to other sectors?
So on IT specifically, I think there are a few factors that are playing out, right? If you look at the long-term, sort of growth prospects of that sector, they are, I would say, very, very robust. As companies think about margin expansion, ITES will continue to benefit from that focus and that trend. In the sort of, I would say, in the more immediate term, right, there could be, sort of little bit of more caution, just given credit costs are a little bit higher, given the macro sentiment. But in the longer term, as you think about the ITES space, that continues to be very attractive. There are a number of processes, that are currently in market as well. So those will continue, to close over time as well, as we'll see through the year. The other thing, and, to think about is that a number of firms are actually very well capitalized at this point. So they will also adopt, a wait and watch strategy to really think about what's the right time to go to market and to seek investment. So, potentially the short term could be, a more wait and watch strategy. And then, as we think about H2, that could be when, sort of more of the deals sort of come to closure.
Right. Which are the sectors do you think will excite PEVC investors the most in the coming fiscal?
Absolutely. So from a sector lens, there are actually a number of bright spots that we're seeing. So within financial services, lending continues to see activity, whether that's NBFCs that are really, expanding and capitalizing, on semi-urban rural growth, whether that's fintechs, that have come up with very innovative, sort of underwriting models that we're seeing in the market. So that continues to be a bright spot. In the healthcare space, both on the provider side, but also when we look at, the API, CDMOs, pharma side of things as well, that continues to be a space, that continues to see activity, as well as, sectors that will see some benefit from China Plus One tailwinds. So if you look at the manufacturing sectors as well, there's likely to be some, activity there. and very, specialized sort of ITS analytics firms will, continue to excite investors as well. So I would say those are the few, that definitely will see activity going forward as well.
Right. And when you compare to the larger Asia-Pacific region, how do you see investment flows into India compared to other markets?
Absolutely. So from the, broader region perspective, essentially what we're seeing here is India, just given the macroeconomic fundamentals, the very robust, domestic consumption that we're seeing with a growing middle class, an expanding, consumption story, all of the domestic sentiment and those sectors, continue to do really well. So compared to some of the other, sort of markets in the region, India, is definitely seen as a bright spot. When we think about, LPs, that have, and specifically the Asia franchises of global LPs, and as well as the more domestic funds as well, we've seen them raise marquee funds, over the last year. And that capital is, all available for deployment. In our conversations, what we're seeing is, the India allocation continues to increase. This is also flowing, through to the sovereign wealth funds, to the pension funds, where you're actually seeing, movement, in addition to a co-invest strategy that they've adopted historically, we're also seeing a lot more, solo deal activity, which is really showing the kind of confidence that they have in India. They're taking steps to set up dedicated teams that will focus on the India opportunity. So I think that gives us a lot of confidence in the overall India growth story as part of the region. So I would say, sort of positive signs from
my final question.
Sorry.
Right. My final question on ESG-driven investing. You've said that your report has said that there has been an acceleration in pace. What kind of growth do you expect in the coming fiscal?
ESG has actually been, a very interesting, sort of story over the last couple of years, right? So last year we actually saw, 2x the number of investments. So we've gone from, we're close to about $8 billion in ESG investments in the last year. A lot of that has been concentrated in the renewables as well as in the EV space. And we do expect that, trajectory to continue. It's become, I would say, an important part of investor strategy as they think about assets, as they think about their global strategy, with LPs also voicing, the need to diversify within this sector. So we're really seeing that, move from more of the mind share to actual wallet share with investments, sort of keeping pace and growing as well.
All right. Thank you very much, Ronika Sapra, for joining us with Bain & Company's latest report on PEVC investments in India and the larger Asia-Pacific region. That's all the time we have here on Newscenter. Thank you for watching. Goodbye.